Hello students. So you all are ready for the boards? Now these are the classes that will help you if you have not yet prepared or you are not yet confident for the boards. This is not the time to start from the basics. So we will just practice for the questions that often come in the exams. I'll help you that how to prepare in the 11th hour for exams so that you could gain good marks. In case of retirement, we could get three types of questions. One, where the question is a short type. You have to calculate just change in profit sharing ratio or the sacrificing or the gaining ratio, or there is an entry in respect of goodwill. The second type of question is where we need to prepare the revaluation account and the balance sheet of the reconstituted firm. And the third type of the question is the question of capital adjustment. Capital adjustment means where the capital is adjusted on the basis of the outgoing partner. Now let us read this question. Here it is given that Hina and Nina are partners in a firm sharing profits and losses equally. Their balance sheet as on 1st April 2020 has been given to us. Tina retired from the firm on the above date. Above date means on 1st April 2020, and the following was agreed upon. Building was to be appreciated by 20%. Machinery was to be depreciated by 1500. Provision for doubtful debts was to be increased by 1500. Goodwill was valued at 21,000 on Tina's retirement, and same was to be treated without opening goodwill account. The balance in Tina's capital account will be transferred to her loan account, and we have to prepare revaluation account and partner's capital account. So this is a simple question where we have to just make revaluation and partner's capital accounts. In this type of question, what we do first is at first we calculate new and gaining ratio. This is the very first step that we have to calculate. Secondly, we have to look for goodwill, that how goodwill has been adjusted. So what will be the entry for the goodwill? We have to look for that. The third thing will be, we will look that how revaluation will affect the balance sheet. Means the effect of revaluation on balance sheet. And then after we will start preparing the accounts. So let us first continue with calculation of new and gaining ratio. So the old ratio was equal and there were three partners, means so equal means 1:1:1. No new ratio has been given to us, neither it has been given that how the share of the retiring partner will be divided among the remaining partners. So the new ratio will also be equal, means the remaining partners will share the profits equally. There were three partners in the beginning. One has retired, so the remaining partners will be only two, and the profit will be divided in the ratio of 1:1. Now, Hina, Meena, and Tina were the old partners, and the new are or the remaining are only Hina and Meena because Tina has retired. So, we will calculate the gaining ratio of Hina and Meena. gaining ratio is new minus old. So for Hina, the new ratio is 1 by 2 and the old was 1 by 3. So how much she has gained? She has gained 1 by 6. Similarly, the next partner is Meena. The new ratio of Meena is 1 by 2 and the old was 1 by 3. So she has also gained 1 by 6. So gaining ratio is 1:1. Now we will make adjustment in respect of goodwill. So for goodwill, the question is saying that goodwill is to be valued at rupees 21,000 and the same was to be treated without opening goodwill account. Now let us first understand this statement, without opening goodwill account. Now if we open any account, it is either debited or credited on the basis of its nature. We know that goodwill is an asset. So if we open it, how will we open it? We will open it by debiting it. We will debit goodwill account and then it will be shown in the balance sheet also. But here it is saying that we don't have to open the goodwill account. Means we do not have to show goodwill in balance sheet. That means the name of goodwill shouldn't appear. Then what will happen? The simple thing, we don't want to show in goodwill. So whosoever is going out of the business, you simply take cash from the remaining partners and go out. Okay. So in such case where goodwill account is not to be opened, we will just take the share of the retiring partner, that is Tina's share in goodwill. So goodwill is 21,000 and Tina's share is 1 by 3. That is 7,000. Tina is going out, so she will need this much of money. Now either you give it from business or you give it from your own pocket. So here the partners have decided that they will not open the goodwill account. That means they will not change their balance sheet. They'll give this share to her from their own. That means from their capital accounts. Now what happens? Capital accounts में से कैसे देते हैं? The one who will gain will pay her. She is going out. So the one who will gain because of her leaving business will pay her in the ratio of her gain. So here Hina and Meena both are gaining. So both will pay her and their gaining ratio was 1:1. So they will pay her equally, means 3,500 from Hina and 3,500 from Meena. This will be paid to her. Now simply think of the entry, forget what the treatment of goodwill says. Simply think, Tina is the receiver, Hina and Meena are the giver. Receiver and giver. Okay. So we have to make the entry according to that. So when Hina and Meena will give, their capital account will reduce and capital account will be reduced means capital will be debited. So Hina's capital will be reduced by 3,500. To reduce the capital, we will debit it. Similarly, Meena's capital will be reduced by 3,500. So her capital will be also debited and Tina's capital will increase because she will receive. Tina's capital will increase by 7,000. So her capital will be credited. Keep this in mind while making the capital account. Now we will check the effect of revaluation of assets on in balance sheet, that how the assets will be shown. So building is to be appreciated. Appreciated means it will increase. Building is an asset and the value of asset will increase. Asset has a debit balance. Okay. So asset will increase. And how much it will increase by? By 20%. Building is of 40,000. 20% of 40,000 is 8,000. Now machinery. So here it is given that machinery is to be depreciated. Depreciated means the value will be reduced. It is an asset and the value will reduce by 1500. The amount by which the value will be reduced is 1500. The asset is being reduced, so the asset will be credited. Then provision for doubtful debts to be increased. Now when the provision for doubtful debts will increase, then what will be the effect? The debtors that are again an asset will decrease, and if debtors will decrease, they will be credited. And it is said that increased 2 rupees 1500. So you need to understand the difference between 2 and by. By means उस amount से कम हो रहा है. Okay, so that amount will be debited or credited. 2 means up to that amount, उस amount तक. So the difference is taken. So here the provision for bad debts were 1000 and they have been increased to rupees 1500. That means they are increased by rupees 500. So this 500 will be deducted from the debtors. Then comes goodwill. We have done the entry of goodwill. Balance in Tina's capital to be transferred to loan account. So this will be treated in the capital account. Now here these are the three effects. So when an asset is debited or when an asset is credited, the second account will be the revaluation account. Means if an asset is debited, revaluation will be credited. If an asset is credited, revaluation will be debited. This all explanation was how we are going to solve the question. Now this is the way from where we will actually start the question in the examination. At first, we will make the revaluation account. You all know the format, that the format of revaluation account is particulars amount, the debit and the credit column. So here the amount of building is being appreciated means building will be debited. That means revaluation account will be credited. So on the credit side, we will write buy building or only building. We can leave the terms buy and to. Buy building account and the amount will be rupees 8,000. Machinery is depreciated. That means machinery will be credited and the account that will be debited will be revaluation account. So on the debit side of revaluation account, we will write to machinery. To machinery account and how much? By the amount it has been reduced. Only the amount by which it has been reduced will be entered here. Similarly, to debtors or to provision for bad debts. We can write anything. So I am writing to provision for doubtful because the provision for doubtful debts has been shown in the balance sheet. So I'm using this term. Increase to 1500, that means the change of amount is only 500. So these are only the three effects on the assets. The increase in assets is of 8,000. The decrease in assets is of 2,000. That means we are in profit. Sorry. That means we are in profit. So the balancing figure will be here. To profit. And this profit will be transferred to all the partners. Hina, Meena and Tina in equal ratio. So the profit is of 6,000, and when we will transfer it equally, it will be 2,000 in each partner's share, and the total will be 8,000. So this will be the very first account that we will prepare while making the question, while solving the question. Now comes the capital accounts. Capital accounts of all the three partners. So the space I have is quite less. This is particulars, Hina, Meena, Tina. Again particulars, Hina, Meena, Tina. You are all aware of the format. I hope this is not the time when I tell you about the format. Capital account starts from the credit side. So first of all, the balance carried down. That is the opening capital of each partner, which is 30,000, 30,000 and 28,000. Then goodwill. If you remember, in goodwill, Tina was receiving, her capital was increasing. And by whom? By Hina and Meena. So Hina's capital and Meena's capital, they were giving her equally 3,500. So her account was increasing by 7,000. And when they are giving, that means their capital will be reduced by Tina's capital account. So 3,500 in Hina's capital, 3,500 in Meena's capital. Okay. Then the profit on revaluation. So that will come in revaluation account name. They all have received a profit of 2,000 rupees. Now here we have general reserve. This general reserve will also be divided equally. So general reserve of 12,000 will be divided equally among all the three partners. So these are the only entries for the capital account. While making this capital account, we will show the treatment of goodwill that I have explained you earlier. When we will make this capital account, below this we will show the treatment of goodwill that that Hina's capital account debit, Meena's capital account debit to Tina's capital account. She will get 7,000 and they will pay 3,500 each. Now let us total. So this is 36,000. This is also 36,000. This is 28 plus 7, 35. 35 plus 6, 41,000. 28 plus 7, 35, 37 and 41,000. So the total is 36,000, 36,000 and 41,000. So it is said that Tina's capital account will be the balance in Tina's capital account will be transferred to her loan account. So Tina's loan account will be of 41,000 and then the balance carried down of Hina and Meena will be 32,500 and 32,500. So this was the only thing that was asked in this question, revaluation account and partners capital account. But I will also tell you how to make the balance sheet. The balance sheet. Assets and liabilities. So here building will be 40,000 plus 8,000, that is 48,000. Machinery will be 30,000 minus 1,500, that is 28,500. The furniture will be remain same as there has been no revaluation in respect of it. There will be no change in stock also. It will also remain same. Then debtors. Debtors will be 20,000 minus the provision that has been increased to 1,500. So it will be 18,500. And then comes bank. There has been no entry in respect of bank. Neither we have received anything nor we have paid anything. So bank balance will also remain same. Now in liabilities side, there has been no revaluation in respect of bills payable. So it will also remain same. The creditors will remain unchanged. General reserve has been distributed, so we will not enter it. Now there is a new liability, that is Tina's loan, which was 41,000, and the capitals. Now the capitals will be only of Hina and me, and their capital was 32,500, 32,500. So the total of both sides is 1,36,000, 1,36,000. Hope you have understood it well. Just do remember that we have to make only two accounts, devaluation and partnership capital. The balance sheet and everything before evaluation was just to make you understand that how to proceed in the question. Try this question by yourself. It shouldn't take more than 6 minutes of time. If it is taking more than 6 minutes of time, that means you need more practice. So keep on practicing, dear. All the very best. This question has been taken from the official website of EduCart from their previous year question papers link. Thank you, EduCart. Thank you, students, for giving your precious time. All the very best for the exams.